Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we take a look at the market this week, we are going to talk about a market recap through Thursday's close. What are some of the things that we're seeing and we've seen happen so far this week?
Yeah, so I think if we start on the hog side of the markets this week, we see hog prices that made nice moves higher as we went through the week. We're up over $4.50 relative to where we were last Friday in cash hog prices. When you look at the pork cutout value, up $4.37 for the week. We were up across the board in all of the components of that pork cutout value. I just remind us that when we look at pork bellies, which has been much of the driver for that pork cutout value in 2017, we were record highs for a period of time. We came off those record highs. Pork bellies prices have made some recovery as we look of late. They were up $8.28 for the week. So pretty good news on the hog side of the market this week. If we change and look at what's going on in cattle, for fed cattle, we were off $6 to $7 in fed cattle for the week. And I just remind us that when you look back at last week's Friday fed cattle markets, they were very strong. We haven't been testing $1.45 fed cattle in a long period of time. So although we were off significantly for this week, it comes off of what were some very, very good fed cattle prices. When we look at feeder cattle for the week, we were steady to 4 higher, while I think we'd call feeder calf prices steady for the week. So not quite so positive news, I guess, on the cattle side. If we look at the choice beef cutout, we were up $11.21 for the week. And when we look there, we are up across the board. I will say rib prices tended to be ones that moved a lot over the past week, up $23.22. That's the highest rib prices we've seen since late 2014. So despite what were some lower fed cattle prices, that that beef choice cutout seems to be doing very well.
Scott, as we talk about those moves this week, are there anything in particular that we're noting that's causing that continued strength in the pork market and maybe a little bit of backing off on the beef side of things?
Yeah, so I think, again, when we look at the beef side of the market first, what we'll say that last week was just pretty phenomenal in terms of the strength we saw in fed cattle prices. You look at those cattle markets, and I'll say we continue to see weights, fed cattle weights that are running below a year ago level. We tend to be very current in marketing. So it tells me that things are staying very current there, and perhaps we'll continue to see some price strength. If you look at where we're at just in terms of seasonal, we'd expect some strength in that beef choice cutout as we seasonally start to get into that grilling season in full swing. And I think those higher rib prices certainly give us some indication that consumers are interested in more of that grilling side. The pork side, so I will say demand for pork certainly looks very good, and maybe part of the reason why we continue to see that side of the market being driven. Consumers continue to like bacon, and I think we continue to find a lot of ways to use that in products.
Scott, the USDA released its WASDE report, and it's the first estimate really on the livestock side for prices and production for 2018. When we take a look at those numbers, what do livestock producers take out of WASDE?
Yeah, so I always go, boy, the take-home point here when you look at their 2018 forecast is expect more of the same relative to what we've seen in 2017. And I say that because they continue to show increases in red meat and poultry production continuing to unfold into 2018. So we get to deal with more supplies of all meats on the market. They tend to show lower cattle, hog, chicken prices as we look at 2018 relative to 2017. Not the same kind of drops that we would have seen, let's say, relative to where markets were in 2014, early 2015, but still declining markets. So I think we have to remind ourselves that the supply side of this market's continuing to expand, and we got to be ready for that as we move into 2018. USDA does give us some trade estimates as well for the next year. They do show growth in net exports of red meat and poultry products, although a much slower growth in 2018 relative to what they predict for 2017. And although some of you may be thinking about whether or not USDA does a good job of forecasting that far out, I'll say when you look at their forecast they would have made a year ago for 2017, they're pretty much in lockstep. When you look at where we are today in markets, USDA was pretty much on track in terms of where these markets were going to be.
As we talk about increases in supplies, more red meat, we talk about the importance that trade and the role that trade plays in supporting prices. Some pretty big moves today from the administration. We saw that Lighthizer was confirmed as the U.S. Trade Representative. And then this afternoon, we're talking on Thursday evening, the USDA Secretary of Agriculture, Sonny Perdue, announced a new Undersecretary for Trade. How important are those elements going to be to our trade negotiations and to ensuring that we have a place to put all this product?
Yeah, so it's nice to see Lighthizer that's been confirmed very strongly on the Senate side. 82-14, I believe, was the vote confirming him as U.S. Trade Rep today. I think that starts to now set in motion. We've had, I'd say, a lot of uncertainty regarding NAFTA and where we sit with Mexico. Getting that confirmation in place and getting him to work, I think the top priority here is going to be where do we go with renegotiation of NAFTA. I think perhaps we can start to see some more certainty in terms of what's that mean for U.S. Agriculture and trade to Mexico as we go through the next several weeks and months. So a good move. And again, getting USDA then to as well recognize that trade's very important to the mix as we go forward with that new undersecretary position that I think really was a result of the 2014 Farm Bill debate. It just continues to emphasize that when you look ahead, the growth in demand for U.S. meat products is going to be driven very much in large part by what happens in the rest of the world, making sure we have the correct people to negotiate, whether it's trade agreements or other issues that come up as trade unfolds and over the next decade. I think it's critically important that we get folks hitting the ground there in both of those positions.
And I also have to say, you have to throw in Secretaries of Commerce, Wilbur Ross, who has been a huge cheerleader for NAFTA and ensuring that those renegotiations not only benefit U.S. production, but to make sure U.S. agriculture isn't lost in the mix there.
Yeah, absolutely. And anytime we start talking about these trade agreements, I like to remind us that there's a reason why all countries want to participate in trade agreements. So you want to take your comparative advantage and make sure that it's a positive out of those trade agreements, because if we make that all happen, I think we can talk about a general economy that's much stronger for all countries than otherwise would be the case. More income in consumers' pockets, and even here in the United States means all else equal, we're going to consume a little more meat. Now, that's the kind of overall positive effects that are very, very difficult to measure. But we don't want to forget that overall economic growth that we get from trade agreements is important as we think about renegotiation of agreements like NAFTA.
A rising tide lifts all boats, pretty much, when it comes to that whole agreement process.
Absolutely.
As we talk about demand, obviously the international side of things, domestic demand, and you alluded to it earlier, pork. And talk to me about what's going on the pork side of demand and why it's like really such a superstar right now.
Yeah, I think so. When you look at the pork side of the market, and over the last 6 years, you'll see that from a food service perspective, pork's been the one that's grown the most. We would have thought historically about chicken being the place where we get a lot of growth, but it's really been pork that's been the driver. And you have to pretty quickly, look at the bacon side of that discussion. Bacon demand just continues to be amazing as we find new and innovative ways to incorporate bacon into a lot of other products that we might be selling at the food service level. So it is that combination of strong domestic demand and strong export demand that I think has been helpful to the kind of growth in pork demand that we've seen in total. And when you think about pork markets again, and we're building new processing plants, we're increasing supplies, both the domestic and international demand are important. So it's good to see that domestic demand growth continue as we look at some of the data of late.
I have to think about, like, growing up, my dad would always tell people, make sure to support your local pork producers because everything is better with bacon. And he's been hammering that bacon point, I think, since I was a kid.
I think we all can agree that another slice of bacon is always good.
Maybe not the cardiologist, but on the protein side of things, yes. Everybody's like, throw a little bit more bacon on it. Scott, as we talk about this strength, and we've seen really some strength in the livestock prices recently, particularly the beef side of things, is it time for our beef producers to implement and maybe consider some of those price risk management strategies to take advantage of this?
Yeah, so I think when you look at fed cattle prices, just as an example, so again, almost $1.45 fed cattle in some parts of the country last week. No one would have talked about fed cattle prices reaching $1.45 this quickly in 2017. And in fact, many of us would have talked about more downside risk than upside potential. So when you look at where they've been, I think all that's happened is we've ratcheted them even higher than many of us would have expected. Is there's a lot more downside risk than upside potential. If I can look at those prices and either look at fed cattle, look at feeder cattle, do something and eliminate that downside risk in what's a very much tougher financial environment for many in agriculture today than where they were just a couple of years ago. Taking some risk out of the equation certainly seems like it might fit into their strategy for long-term survival better than for a while. So we do want to lock in when we see these kinds of high prices, and we do want to recognize that the kinds of prices we've seen, especially in cattle markets, have been they've been much higher than we would have expected, and take advantage. Sitting there and going, those prices are too high and they're going to correct, and not doing anything is that old risk management plan I talk about, and it's not a very good one.
Scott, anything else this week?
I think we've covered the majority of things for the week, Megan.
Anything to look ahead to report-wise next week?
I think we're going to have another fairly quiet week in terms of reports. We'll get a consumer confidence out here at the end of the week, and we can talk a little bit more about what's happening on the domestic demand front.
All right, Scott, have a great week. We will talk to you next Friday.
Very good, Megan.
Thanks, Scott. For questions or comments, go to our website, brownfieldagnews.com. You can submit them there. You can also subscribe to have our weekly livestock market update delivered to your inbox every Saturday morning. And for market updates twice a day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.